ETH is pumping and everyone's staring at that big 10k number. But I'm telling you, the real number to watch is 8,750. Because that's where things might flip. Big players don't wait for retail targets, and that's a retail target, this 10k. Big players, they exit just before, and if you've seen my video on how to reach 0.1 BTC, you know I'm all about timing and structure. So today, I'm gonna break down 10 clear reasons why ETH is reaping real logic, real fundamentals. But at the end, I'll show you why the closer we get to 10k, the more sell pressure we will see and what that means for you, for your portfolio, for your wallet. It's worth sticking around because reason 8 is something even most ETH maxis don't talk about. I'm Cédric, and if you want to dive deeper into the latest financial trends and behind the scenes analysis in the Web3 world, make sure to hit that subscribe button. So first reason why ETH will continue to grow. Regulation. Green lights all the way. Over the past few years, US regulations on crypto have been super strict and all over the place, but now we are seeing a complete shift, like a real 180. The SEC basically threw out their old crackdown proposals and started openly backing decentralized code. Honestly, I did not expect this turnaround so soon. It's huge good news for ETH. First off, the passage of the Genius Act. It clarifies regulations for stablecoins, allowing banks and non-banks financial institutions to issue them compliantly. And we all know the two biggest stablecoins by market share, USDC and USDT, run on what? Ethereum, yes! Next, the Clarity Act is moving forward. It defines ETH as a digital commodity under CFTC jurisdiction, not a security anymore. Barriers for ETFs, stacking, and DeFi compliance are all being cleared, slashing regulatory risks big time. Reason 2. Institutions. The ETH version of MicroStrategy steps up. It's not just regulations stepping up, institutions are dropping constant good news too. We all know how MicroStrategy went full Bitcoin. Well, now ETH's got its version 2. And I think it's flying under the radar. SharpLink, have you heard about them? They just bought 176,000 ETH. That's not small money. You don't do that unless you've got a very clear macro conviction, unless you have a plan. And they stacked 95% of their ETH right away. And Ethereum co-founder Levin is backing it and serving as chairman. And BlackRock's CEO is talking up ETFs. So that's something. Plus, there's this mind-blowing stat I gotta share. Ethereum already holds over 80% of real world assets, RWA. This market, 80% of RWA market share and 50% of the stablecoin market. Bottom line, if you are bullish on RWAs, on blockchain technology, on stablecoins, either way you've got to be bullish on Ethereum too. And if you think that's big, wait until you see what's happening on chain with stacking. It changes everything. Yes, that's the third reason, stacking. Let's talk about that. ETH stacking is now hitting 30%. I mean, that's a full third of the supply locked up, just sitting there, not moving, and that changes everything. If you ask me, once the SEC greenlights this stuff fully, we are gonna see even more pension funds jumping in, and that's when it gets real. Stacking yields will get more legit, solidifying ETH's spot as a yield-bearing asset. The next big breakout could very well be stacking ETFs. 4. The technical indicators. Bull market signals all over the place. Yes, technical indicators on the charts are a key signal too. ETH's price has reclaimed the bull bear divider, the weekly MA200. This is a classic sign of the bull market returning. The charts forming a bull flag pattern with momentum building and the downward trend, being over. Ethereum's successfully broken through 3,000 and this strong move could just keep going. 5th reason, tech upgrades. Pectra packs a punch. Then there is the Pectra upgrade we talked about before, bringing a ton of super buffs. Validator stacking cap raised from 32 ETH to 248 ETH, massively lowering the barrier. Optimized fees, boosted L2 throughout, lower costs, speeding up roll-up adoption, and account abstraction support. Users won't need to pay gas fees anymore and batch transactions are now possible. User experience, in short, gets a huge upgrade. And the speed too, TPS, transaction per second. The gas limit target raised and theoretical TPS is hitting 2000 plus. In simple terms, The Pectra upgrades makes ETH space network faster, with bigger capacity and lower entry barriers. It's not just leading the pack, but laying the foundation for massive DeFi unstable coin scenarios. And yeah, it's bullish, but it also sets up for a huge trap later. I'll explain that near the end of this video. But yeah, I did a video when Pectra first upgraded. If you're interested, check it out. I went into more detail there. Sixth reason, token economics. Don't forget, ETH has that burn mechanism in play. After EIP 1559, every unchained transaction burns some ETH, especially when things heat up, with burns outpacing issuance, leading to deflation. Simply put, ETH supply is shrinking. Add in stacking logs, surging transaction volume from L2's growth, and ETH circulating supply. Supply will just get scarcer. And we have the rate cuts, making stacking yields even sweeter. Because now, the Fed's odds of pivoting to rate cuts, they are rising. By mid-2026, rates could drop below 3.25%. And you know what that means? Treasury yields are falling, while ETH stacking yields hold steady or rise, creating this yield gap that will suck in cash like a magnet for ETH. And that gap could widen, since ETH stacking offers more stable cash flow and asset growth potential. Overall, the macro wins are super favorable for ETH. Now, you combine that with what I'm going to show you in reason 10, and you'll start to see the full playbook. Reason 8, mass mainstream adoption, global buy-in. ETHs become a core asset embraced by global mainstream finance. For example, the Trump family via their WIFI platform, World Liberty Financial, they spend 48 million buying ETH to back their DeFi ops. On the institutional side, ETH spot ETFs net inflows smashed through 1.1 billion. 19 straight days of inflows, set a record. From Europe, Deutsche Bank and BNP Paribas, to Asia Pacific's Hong Kong ETFs and DBS Bank, plus projects in Latin America, the Middle East and Africa, all are prioritizing ETH. This is real money, real demand. And yeah, let's talk again about layer 2s. All chains lead back. Not only are more enterprise and institutions buying ETH, they are jumping into blockchain, and ETH's layer 2 tech is often their top pick. Think Sony, Robinhood, Binance, they are all in. Why? L2s are getting more mature, with lower fees, faster speeds, higher throughput. That brings more real users for apps, which means more gas burnt on ETH mainnet. And the team, the Ethereum team, we can't speak our boy, Vitalik, you know, the V-God, Vitalik Buterin, the thought leader after Satoshi, who's pushing hard, especially on zero knowledge proofs and RISC-V virtual machines. Plus, the Ethereum Foundation is reforming, setting up dedicated bodies to connect with institutional users. This ecosystem is evolving fast, mosquitoes. All of this sounds like ETH is unstoppable, and all of that sounds unstoppable, almost. It's almost too perfect. Let me show you why I say it's almost too perfect. Why things might get ugly near 10K. I think we will get to 10K, you know, easily. Because we have all the narratives we want. But at the end of the day, it's the people with real money who decide where this goes, even if the planets are aligned. If big money don't show up, nothing happens. Doesn't matter how bullish the setup looks, like now. But here is the thing I've noticed, and you've probably seen it too. BlackRock, Trump-linked wallets, some real crypto OGs, they have been stacking ETH. Why? Because doing a 5x on Bitcoin right now is tough. It was easier back in the past. I mean, you can't really short BTC anymore either to shake out the market. There is too much buy pressure, it's too risky. So if you are one of those big players, you know, and you're sitting on billions, what is your move? What is your choice? It's Ethereum. It has ETF2. It has momentum, it has regulatory clarity and way more room to run. They can pump it, extract a solid 3x or 4x, maybe do it again, then rotate back into BTC, which is still the end game. Just like the old gold to silver ratio, you know, you push the silver, then you settle back in gold. And in my opinion, that sell rotation starts before we hit 10K. Before 10K, it is the number retail is watching. The smart money exits just before the crowd gets there. That's why I think 8,750 is where things might start to feel off. Just watch how the market behaves there. That's where things could get weird. So, wrapping it up, regulations are easing, tech's leveling up, institutions are buying like crazy, macros are shifting. With these four super forces in motion, we know this isn't just a simple rebound, it's a full-on value revaluation. ETH is at a historic tipping point. So, what about you? Are you watching from the sidelines or are you in already? Tell me in the comments, I read them all. I'm Cédric, and if you want to stay on top of the latest financial trends and deep Web3 analysis, hit subscribe, like, and that notification bell so that you don't miss any big insight. That's all for now. Don't get played, and catch you in the next video.